Now in the video I released yesterday, I highlighted this area and particularly in Tesla that was a gap, and I mentioned that it's most probable that Tesla is going to be filling this gap for Monday. And sure enough, we ended up seeing Tesla have a massive fall, causing it to pretty much fill the gap. Now in yesterday's video, I mentioned that the reasoning behind why it was most probable for Tesla to fall down and fill this gap had more to do with economic conditions and also monetary policy than it had to do with technical analysis. In fact, in yesterday's video, I highlighted the fact that technical analysis is really just one data point, and it's not one of the strongest data points out there. However, when you go on YouTube, you'll see a bunch of individuals who only show you the charts, and they really don't understand what's going on in the overall market. In fact, if you ask the chartist, why did the stock go down? Oftentimes they don't have a real answer. They'll just tell you, well, the stock broke below a certain level. But the real issue is that there's underlying, factors that cause a stock to go down below a level. It's not just because of the squiggly lines you draw on a chart. There are real reasonings behind what actually happens in the overall market. Now, I want to highlight this tweet I found on Twitter from an individual who primarily just looks at technical analysis, with them saying, what in the actual F is going on with Tesla? Now, I went ahead and crossed out the name and handle of this Twitter user along with his profile photo because I think that outing an individual particularly would just be a poor reflection of my character. However, the main reason why I'm showing you this tweet is that oftentimes when you just see individuals looking at only the charts, again, they're clueless on what's currently going on. Now, in yesterday's video, I highlighted that we absolutely want to pay attention to the speeches from some of the Fed speakers and parse through what they are saying along with some economic data. And I want to start off with what Fed Vice Chair Barr said. Now, today we heard him say a very long speech with the premise of the speech really saying that, hey, the financial markets are much more complex than we give them credit to, and we have to take a holistic approach and also look at several different data points while as well as kind of reevaluating and evolving our stress tests. Now, this is a huge issue because just not too long ago, about a week ago, we had the Federal Reserve mention that all 23 banks that it did the stress test on passed on the stress test capital levels. However, now we're hearing from the Federal Reserve kind of going back on their words and saying, hey, we still have to update and modify our models, and it's not completely sure whether or not these banks are going to pass the stress test. Now, this makes sense that he came out and said this, especially since Bank of America last Monday released a statement saying it had contacted the central bank to find out why the regulator's results were different from its own. In fact, Bank of America said that in the Federal Reserve stress test, they were more likely to succeed, but when they did their own numbers, things looked a lot worse. So hearing the vice chair from the Federal Reserve come out and say, hey, we may have to continue evolving our numbers, isn't really providing too much certainty for the market that, banks are going to be able to still thrive during a recession and still be able to lend. Along with that, we also had Fed President Mary Daly speak, and she reiterated the hawkish rhetoric that we have been hearing for the last couple of weeks, saying that the Federal Reserve is most likely going to have to hike a couple more times. Now, this really pairs well with what I told the Push and Profit private group by saying, hey, in July 26th, I foresee that it's very likely a 25 basis points hike is going to occur. And so when you hear speakers from the Federal Reserve saying, hey, we're still not too certain on the banking sector during a recession, and also you hear them saying that we are going to have to hike a little bit more, just kind of reiterating that point, well, of course, that's going to cause some concern for the markets. But along with that, we also had the consumer credit report came out, which revealed a lot in itself. Now, I know that parsing through the data for the consumer credit can seem a little bit intimidating, but I want to go ahead and break this down and exactly tell you guys what this data exactly means. So we saw that revolving credit, which is mostly made up of credit card debt, went up by 8.5 billion to a total of 1.2 trillion, which means that Americans are using their credit cards much more. But we also saw that non-revolving credit, this is a debt for things that are a bit more fixed and long-term, like car loans, right, for Tesla, and of course student loans. And so this kind of debt actually decreased by 1.3 billion to 3.6 trillion. This means that people are either paying these loans off or not taking out as many. And so the key important thing to note from all this data is that the amount of borrowing slowed down in May compared to previous months. This was mostly because of the decrease in non-revolving credit like car loans and student loans, which could suggest that lending standards from banks is getting a little tight and more stricter, and that also people may be less likely to borrow money because it's more expensive to do so at these elevated rates. And so the reason why we want to pay attention to this is because obviously when it comes to participating in the overall market, we want to pay attention to the obviously economic conditions, but more so for Tesla, we want to pay attention to what auto loans are looking like. For example, in a video I did some time ago, I honestly don't remember, I told a anecdotal story on how I had a cousin recently just purchase and finance a new car, and their interest rate is literally 12%. Now the average right now is 8, but that doesn't mean that it's going to be 8 for everyone, because if you have a poorer credit rating, well then your interest is going to be a lot more higher. And so this is pretty bad, because that means that it's going to be more expensive for individuals to buy cars like Teslas. And so this is why on the channel I emphasize the importance of looking at several different data points. Oftentimes I get joking messages about a crystal ball, but in reality, look guys, I don't have a crystal ball. The only reason why I could understand what's currently going on in the market is because I'm not just looking at the charts, right? I'm looking at several other factors, and in fact having a more holistic approach, and thus having more data kind of gives you more of an idea of what's currently going on. However, with that said, I know that what I talk about in terms of Tesla and the overall market is not very popular, and it's going to be very difficult to actually get some views on any videos that I do, because the popular thing to do would just show you guys a chart of Tesla and tell you guys how Tesla is going to the moon. However, I really take pride in really just doing the research that I do and sharing that information for you guys. So if you guys find any value and utility in what I say and provide in my videos, make sure to hit that like button and subscribe to the channel if you haven't done so already. But with that being said guys, I want to go ahead and hop into my laptop and then take a look at a couple other things from a technical approach now. Alrighty, so now we are officially in my laptop. Now I do want to address any confusion over here. So earlier in the beginning of the video, I mentioned how technical analysis is just one data point, and it's not really the strongest data point to look out there. Yet here we are at this point in the video looking at the chart for Tesla. So why is that? Well, here's a couple of things. I don't want anyone to get confused. I don't dismiss technical analysis completely. In fact, I use technical analysis daily along with several other data points. I just don't think this is a data point that holds too much value as opposed to the other ones out there, right? And it does have some utility to look at. Now, in regards to Tesla, I do look at technical analysis and hold a little bit more weight for Tesla for this main reason in particular. So I want to go ahead and show something to you guys. So we see here institutional ownership for Tesla, 44%. Now, this is actually pretty low in comparison to a lot of the other mega cap stocks, right? So with that said, Tesla is a stock that's held by a majority of retail, right? And that's actually a good thing, right? You actually want stocks to be held more by retail than institutional investors. And in this video, I won't go too much into the details as why. I think that's going to kind of put us in a different tangent. I did break it down in yesterday's video, but in this video, I do just want to emphasize that Tesla's, a favorite among retail. And what does retail mostly look at? Technical analysis. And so there's, the psychological action where, if there's a stock that's held more by retail and they use this data point the most, well, they're probably going to base a lot of their actions based on what's happening on the chart. So that's something I do want to address with Tesla. Now, one of the things I said yesterday is, hey, we're probably going to fall down and fill this gap. Now, we pretty much touched it, but we see that, there's like this wick over here, this tail, this shadow, whatever you want to call it, right? There's so many different names that people call it, right? And so we did actually go down, but we didn't close on the daily chart at this level at the gap. We actually closed a little bit higher, right? So that's something that we want to pay attention to as we go into tomorrow, right? So what's happening tomorrow? Well, I want to show you guys this, right? Going back to the economic calendar, we have the NFIB Optimism Index, right? So this is basically to really just generalize this and simplify it, right? It's basically an index that's done, right, nationally to survey small businesses. Why? Well, because small businesses make up a big portion of the economy. And so we want to survey small businesses to see how exactly they are feeling about the markets, right? And so if we have small businesses saying, hey, things are good, well, that would generally seem bullish. And then if the small businesses say, hey, things are kind of bad, well, that would be bearish. Now, I don't pay too much weight on this. And the reason why some of these indexes, right, I don't put too much weight on is because when it comes to data, right, it could get a little technical in the sense that we have to honestly understand what businesses are they surveying and how many. So to my understanding, this index surveys around 600 to 700 small businesses, right? That's not enough data to really collect, to really see what the true optimism is for the country when it comes to small businesses. Because what are the chances that you get a lot of small businesses that are actually thriving right now, right? And so that's something that we have to take note of. And so that's why tomorrow it's not going to be a very hectic day. Yes, we do have this data coming out, but it's not something that's going to cause too much concern. So we're going to probably see overall less volume by time for Tuesday, right? However, when it comes to Wednesday, that's pretty much where the big action is going to come out, right? And the reason why is because, of course, we have the CPI index. Now, this has a lot more weight than this, right? Because this is basically what is going to tell us as far as an inflationary gauge of where we're at. Again, along with the core CPI year over year, CPI, core CPI year over year, etc. But along with that, we also have more coming out, right? So we have Richmond Fed President Barkin speak, and then we have Atlanta Fed President Bostic speak. Now, I do want to kind of just put it out there that although we have these two individuals from the Federal Reserve speaking, kind of getting a little technical into it, right? They're not voting members on the FOMC committee, right? So it rotates. So, when we had Vice Chair Barr speak, Mary Daly, Mary Daly is a voting member. So, what she says is important to listen to because she actually votes on whether or not they're going to hike, pause, or cut. Right? These individuals are part of the of the Federal Reserve, but they're not part of the voting. They don't make the votes for the FOMC committee for this year. Of course, it rotates. And I believe maybe one of the I would have to double check, but I'm not going to do that now. One of these may be able to have a voting right next year, right? But anyways, along with that, we also have the Fed Beige Book, right? So. And then, of course, on Thursday, we have the PPI, which is even more data, right? But for tomorrow, I think it's going to be a much more calmer day, right? So in regards to Tesla, let's go to a 15-minute view. We saw this heavy selling, right? Now, tomorrow, while I do expect it to either move sideways or downwards, I don't think we're going to see too much of a downward pressure in terms of price action. Why? Well, we already filled that gap, right? So we already filled this area. And one of the things I said is, hey, around here where there's very little volume by price, well, that's where we see big movements in the stock in regards of the trend, right? If the trend's going up, it's going to be a big spike up. If the trend's going down, it's going to be a big spike down, right? Because if there's selling pressure and there's low volume by price, that's going to move the order books down. And so that's basically what we saw today, right? Why did we see the selling pressure? Well, we had bad economic news, and we had the Federal Reserve kind of tell us, or members of the Federal Reserve speak today, say kind of bad things, right? So in that regards, tomorrow is going to be a much more softer day in my view. But again, I do want to emphasize that when it comes to, just your kind of participation in the market, you should never just trade or invest based on, my insight, right? You should always just trade and invest in whatever you see value in. And I want to emphasize this because I do see comments and messages of individuals saying, hey, I made money because I followed this trade that you said. And, yeah, I do provide my insight, and I do think that if it's something you guys agree with, then definitely take action. But please do not follow me blindly, right? Because, yeah, for the past couple of months, everything that I have said has been spot on. But we also have to understand that I'm not going to get everything right all the time, right? There's going to be a time where I'm going to get something wrong, and that's bound to happen, right? I'm not, some immortal being who could just get everything right. So, and I know it's sad that I had to say that, but I do just like to provide that kind of disclosure or warning, right? But with that being said, for Tesla, right, I always talk about Tesla from two different perspectives. One from the perspective of a long-term investor, and then another from the perspective of a short-term trader, right? So as far as trading goes, it's really the same. I don't plan on shorting Tesla even if it falls down. And I know that may confuse people, right? Especially as I called out that Tesla was going to fall down today. So if I called it out, and why did I not trade it? Well, one of the things I don't like doing, and this is specifically for Tesla, at this current moment, right, this could change in the future, is I don't like shorting Tesla, even in the short term, in my short-term trading account, because Tesla's one of those stocks where at any moment, we could have some news come out that could move the stock. Now, this could happen for any stock, right? Any stock, Apple could come out with something, but much more because Elon Musk has built a presence on social media, right? If you look at his following on Twitter, it's insane, the amount of reach that he has, so people don't understand the power of social media, and I think Elon Musk over the past few years has really leveraged the power of Twitter to really get out some news that's coming out for a company without it just kind of being just news that's just hidden away. It gets kind of out there, right? And so, of course, even if I'm positive that Tesla was going to short or fall down today, I still didn't even trade Tesla, and that's fine. I don't have to trade every single day. I did see in the comment section in my last video, someone said that they did get puts, so hopefully they did make a profit on Tesla with today's price action. But again, I hope that if you're watching this, you didn't do that because I said this. I hope you guys saw value in it as well, right? But going into a long-term perspective, this is actually a good buying opportunity for myself, right? For my long-term portfolio, as I've been complaining in a sense for this whole year of times to buy Tesla, because pretty much in 2023 in January we rallied up. I didn't get a chance to add more, right? I got lots of chances in 2022, right? I don't even have to talk about 2022 anymore. But there was lots of opportunities. In 2023 we rallied up, and Tesla honestly has done so well for my long-term portfolio. We had some opportunities over here, and then Tesla actually rallied up again by a tremendous amount. And so this area that we're currently seeing, it may be short-lived. It may be like this, a downtrend like over here, or it could possibly be a little bit longer, right? It may come down even further. Again, we have to be data dependent and see what actually ends up happening. But this is definitely an opportunity where I'm going to be, scooping up some more shares for my long-term portfolio. And it's not all the time where I get to do this because, the last time when Tesla had an opportunity to buy, it's not like I have unlimited money and I could just buy Tesla all the time. Of course, I have to have the capital set aside to purchase more shares when the opportunity presents itself. The other two times I didn't, right? Today, or not today, but at the current moment, there's some more capital set aside where I could finally take advantage of the dip. And so, this is going to be a good opportunity, not only for myself, but a lot of investors, especially as, when we look at the fundamentals for Tesla, right, and we look at the economic conditions, auto loans are very high, but Tesla has something that I've been saying for a while, which is pricing power. A lot of people like to dismiss the fact that Tesla's, cutting its price and that it's struggling to keep up with demand. No, I think Tesla is doing this because it's very important to stir up demand, especially as you go into a recession where demand is going to dwindle, right? It's going to, obviously get stifled. And so it's important to be able to do that. And so, this is why, and also Tesla just has a lead in obviously the EV space as it has the largest market share. Of course, one of the threats is in China with BYD, but Tesla is definitely very optimistic going forward. And also we have to take into account the software that Tesla's working on, which could definitely, pad up the profit margins as well with FSD. Tesla's the closest company to getting that solved. So this is why I'm bullish on Tesla. I mean, there's several other reasons, but I don't want to keep this video too long. I think I went on long enough, but my thoughts on tomorrow is that, hey, we're probably going to close maybe a little bit lower, maybe sideways, but I don't believe we're going to see too much action. Of course, catalysts could come at any moment, and Elon does a good job at doing putting the news out there. But I don't expect much for Tuesday. However, going into Wednesday's trading session is going to be something that we're going to want to really be aware of, as bad CPI reports could cause further pain and pressures in the market. And of course, a good CPI report could let us know that, hey, maybe the Federal Reserve may only hike one additional time by 25 basis points. But anyways, guys, that is my thoughts. Like I said, I don't want to kind of ramble on here. Hopefully you guys enjoyed this video. Make sure to watch this next video right over here. And with that being said, guys, I'll see you guys on that next video. Take care.